Hey guys, welcome to another tutorial video. Today I will be discussing trend lines with you, and basically what we want to know is how to place trend lines, or how to determine if a currency pair is trending, and how to trade using trend lines. So we'll just get to it then. Okay, I'm looking at today the Australian dollar versus the New Zealand dollar. That is my currency pair that I'm looking at today. And we want to place a trend line using the trend line, the drawing tool. Here it is, the drawing tool to place trend lines. Okay, so the first thing that I want you guys to know about trend lines is that you have to find a trend. And secondly, apart from finding the trend, it is highly unlikely that you find a currency pair trending. Currency pairs are likely to trend 20 to 40% of the time. The rest of the 60%, it's usually a lot of ups and downs, a lot of aggressive buying and selling of a currency pair. So the first thing we want to do though, looking at trend lines, is we want to find the trend. We want to spot the trend, okay? And we did say that to find the trend, you need multiple time frame analysis. For example, we are looking at the 30-minute chart, 30-minute time frame, okay? And there is no trend. So we have to find it. So let's look at the hour chart. There is no trend line there. 2-hour chart, no trend line there. So I'll just skip to, the time frame which I found the trend, just so you guys can actually see this. We'll just jump to it. Okay, they are very different types of trends that you can find in the market. And one thing before we get to placing trend lines that we want you guys to know is that to place trend lines act as support and resistance levels. And the idea at support levels is to buy at a support if your trend line fails to break, and to sell at a resistance if your trend line holding as a resistance holds that resistance, and market price actually fails to break above that trend line's resistance. So we are looking at the Australian dollar versus the New Zealand dollar, and we have what we call a channel. Okay, there are channels, there are symmetric triangles, there are many ways, and we'll get to all of them so that you guys can actually be advanced Forex traders. Okay, so with channel here, I have Australian dollar, New Zealand dollar. I'm connecting the lower lows. Okay, I have to connect these first of all. Okay, and I have 1, 2, 3, 4, and 5 of them. Okay, which is actually good. Okay, it's actually good because you have to find at least three of those, or three of those if you are plotting that as a resistance. Okay, so that is my descending channel. What I'm doing here is I'm plotting a descending channel, and I'm going to explain exactly what happens in a descending channel. Okay, so I've connected the lows. The next thing I have to do in a descending channel is to connect the tops. So I start from the top and I work my way to the bottom. Okay, there we have it. This is our descending channel. So exactly what happens here at our descending channel, what I have here is support at the bottom. Okay, this is support. Basically what happens is market price has a hard time. Sellers are having a hard time pushing the price lower than this trend line holding in support here. And they're also having a hard time breaking above the resistance trend line holding this resistance. Okay, so basically you've seen how we plotted them. You connect the lows and connect the tops. Okay, so what happens in a channel is traders sell here at the resistance, they find support, and then buyers try to push the price higher, and basically they are fighting for a breakout. So that did look like a breakout, okay, because buyers started buying this at the support level, and then it broke out. But then judging by that candlestick that you see, it's a shooting star, so buyers could not push it any higher. As you can see, there was not another bullish candlestick to follow this bullish engulfing candlestick. So eventually you do have a ranging market here, and there was a slight breakout, and then this trade was fundamentally flawed. Okay, what happened here? We had the New Zealand Reserve Bank of New Zealand statement, which actually floored that trade. So that's when fundamentals come into play. Technical analysis cannot help or support your trade. So that's it for descending channel. I hope you guys took notes about that. We're also going to look at, let's find another one. I have the US dollar versus the yen. I have an uptrend and a channel, another channel. Okay, so in an uptrend, what I want to do is to connect the lows just like that. there you see, as you can see, market price has a hard time breaking through, and judging by these candlesticks, they did not close below. For example, I can use the line chart, and you can see that market price did not break below those levels. That's when you use line charts if you actually want to see if a support or resistance level was tested. Okay, that's what happens. Secondly, I have higher highs right over here. Market price keeps creating higher highs. As you can see, just like the previous example with the Australian dollar, New Zealand dollar, sellers, that's a resistance, support, resistance, support. Basically, you can judge that this is a ping pong game, I guess, that market price is playing. There's a lot of buying and selling, buying and selling. Eventually, there has to be a breakout. Okay, you have a slight breakout there. And of course, judging by what happens afterwards, looking at your relative strength index, for example, because when you're trading trend lines, they are not indicators. You know, they do not tell you how high or how low a market price will go, or whether there'll be a divergence, for example, if you are looking at the MACD indicator, which we'll also explain looking at other tutorials. Okay, so when a trend line support or resistance breaks, that support or resistance becomes now a support level. For example, if a resistance breaks, it becomes a support level. Let's look at this, for example. It broke initially, and after it broke, market price tried to push it lower, and then there were still buyers left in the market, so it held a support. Eventually it breaks, and market price has to find a second level of support. You can see this by this resistance failing to break. Eventually, when it does break, you have that becoming a support level. Your support now, your initial support, has to hold. If it fails to hold a trend line's support, let's move this. If the trend line support fails to hold, then you have a trend reversal, meaning that, as you can see, in an upward trend, sellers will start dominating, and it broke. When it broke, there was a lot of selling that took place in the market, which is what we call a bearish bloodbath. Okay, we are going to look at the last example. We're going to look at oil right now. I want you guys to see this. So what happens here is we have a symmetrical triangle. Okay, in a symmetrical triangle, we have, let's see, a bit of a trend here holding a support. Okay, that is your support level. Let's just try to place this like that. Okay, I believe that is better. And I'm going to place another one in a symmetrical triangle. There, that looks good. Okay, symmetrical triangle. What's happening here is this triangle is holding as support here, and we have another resistance there. And again, we are looking for a breakout. Eventually, when we do have a breakout, that will determine where the market price goes. Okay, so we have a lot of breakouts here, and whenever you have a breakout, always look at your relative strength index, your MACDs, your stochastic oscillators, to see if that breakout is going to continue. Because if market price does break out and your order size above 70 levels, there's a high chance, you know, that it will start falling again. So okay, we have support, we have a resistance, and what happens here at the edge of the triangle, if you have a breakout right here, there'll be a lot of buying. And judging by oil here, it was at $48.68. It went all the way up to $51.66, which is a lot of money, you know. So I hope you guys enjoyed this tutorial, and I'd like to share just one more thing with you. Whenever you placing trend lines, do yourself a favor. Do not place them on minute charts. Okay, support levels, resistances, trend lines in minute charts, they are bound to break. Example, I have here a resistance level right there, 15-minute chart. As you can see, it's a resistance level. You could call that a resistance level. Okay, if you're looking at our video for resistances, you'll actually see that that is a resistance. So what happens here? Market price has a hard time breaking through, but because it's a 15-minute chart, you have a breakout, a very strong breakout right over there. As you can see, a rally happened after that. So do not place trend lines on minute charts, as they are likely to break. There's a high chance they will break. Okay, most of the time, I'd say 80 to 90% of the time. So whenever a trend line is tested, the more it is tested, the more likely it will hold. As you can see, the more times it is tested, it holds that support or resistance level. I hope you guys enjoyed watching this video. Stay tuned for the wrap up about trend lines. And for any questions or booking a free trading lesson with us, visit currency-articles.com. Thank you.